in light of current volatility, which has been just when you think, oh, you know what, maybe we'll dabble in a little bit here, and then boom, another downturn, and then another downturn. Is there a light at the end of this tunnel? It's not a V-shaped snapback this time in the markets. And so I have been really impressed with a number of advisors that, as you mentioned, lean into this type of market where they genuinely believe that this is where we win. These times right here. This is why I became a financial professional, Chris, for moments like this, because the last 10 years, let's be honest, there's a reason why 7 million new accounts were opened up at Charles Schwab last year, because it's a topic of conversation, just investing was, and anyone could do it. But now this is where those competencies really begin to shine. And so one of the things that I gleaned from a very successful team was I tried to really annotate exactly what it was and how they were framing conversations in light of the current volatility. And what we came up with was ECA, and that was empathy, context, and action. Like what do we do next? And empathy, and I think everybody would agree, and we've heard the adage before, people don't care what you know until they know how much you care. And recognizing that the affluent today, and I'll speak in particular to that investing class, that ultra high net worth and that high net worth asset class, they have voiced some anxiety with the markets today. Recent data that we just received, polling data, suggests that nearly 50% of affluent investors over the next 2 years are looking to add another provider to their current list of providers. That it was 10% 2 years ago. I mean, that is a dramatic shift in light of current volatility. They're looking to add. Well, why would they be looking to add someone? What are they looking for? What are they not getting where they're at right now? And the two things that we hear a lot are around the topics of risk mitigation. And so that must be anxiety around how they've performed through the downturn. And so empathy, that first bullet point through this volatility, is all about letting them know that you hear them, that you can appreciate what's going on in the markets and in geopolitical environment as well, that you do have your finger on the pulse and you're not surprised at what's happening. And so empathy is that first bullet point. Are you finding that as well, that just being able to listen and hear that feedback?
So it's so interesting, just to back up for a second, because I've had many conversations in the last couple of weeks about the topic of turbulence and volatility. And I pause and then I just ask the question. I said, correct me if I'm wrong. Isn't this why you became a financial professional? To really help people look to the future with anticipation and tune out the noise and make informed decisions? Isn't that where you get your highest level of fulfillment? And universally, the response is very positive, to the affirmative. What's interesting, and I keep forgetting about this, is earned money is so enlightened. And empathy is a two-way street, because almost to a person, a financial professional's favorite clients, when they call the advisor, the first question they ask is, how are you doing? Like, through all of this, this must be nutty for you. They're not really concerned themselves, aside from being concerned about the financial professional. That empathy validates for a financial professional, this is exactly who I'm suited for. The philosophical alignment, the chemistry, the compatibility is so incredibly positive. But anyway, long story short, to answer your question, yeah, empathy, that bedside manner, just basically making sure the client's heard, absolutely essential.
You know, that it boils down to, among other things, that to maintain relevance in an environment that we find ourselves today, to maintain relevance, your business and your process must meet the current demands of your clients and prospects. In order to maintain relevance, your business and process must meet the current demands of your clients and prospects. What are those current demands? Well, there's only two ways to know. You're either guessing or you have put in place a feedback loop to understand what those are. Because not knowing the demand leaves us open to outside competition. And we know now that the high net worth and ultra high net worth, 50% of them are open to adding another provider. So that's unnecessary exposure. So soliciting and creating a feedback loop from an existing client and even those that are in your prospect circle, that what is it? What needs are currently not being met? And so that's part of that empathy, right? That's listening. The second bullet point on ECA is context. And I was in Milwaukee yesterday. I'm in Dallas today. And yesterday in Milwaukee, an advisor, very enlightened advisor said, Chris, we like to share with our clients some context around the current volatility. And I go, share with me, what are you saying? He said, we like to ask questions that promotes thought more than just regurgitating data. And so we would ask them, hey, out of curiosity, what would you guess how many times the market has fallen into a correction since 1928? How many times have we fallen 25% or more? And he says, boy, you're shocked at the number of answers. He says, the answer is 26. He says, and then I follow up with the question, how many recoveries do you think we've had since 1928? And he says, they get it. They're like, well, 27. He says, yeah, you're right. And he says, and I like to go one step further in this area of context and say, do you know what the average decline in the market was on those 26 drawbacks? And I said, no. He says, 36%. He says, you know what the average appreciation was that followed on the 27 recoveries? He says, 114. He says, with that context, I give them the bridge back to the fact that we have a process. And he says, our process is prepared and is built for these markets. And that is one of the reasons why our process has allowed for us to set aside a given amount of cash to take advantage of declines in the market such as this, where we get value disconnect. And after a 25% decline in the market, we take a 10% new position. And for every 5% incremental decline from there, we add another 10%. Giving them context followed with a bridge to action is what alleviates anxiety. And so empathy, context, and action has been really what I've pulled out of how current advisors are meeting, really exceeding the current demands of their existing clients.